We got to come up with a solution for this, Chris. So, anyway, hello everyone. Welcome back to the RationalInvestor.com's daily brief, our free show. Would like to start these videos with a little bit of punch, but unfortunately, we're kind of really discombobulated right now, which is a little disappointing. So my apologies. Trying to scramble here. I'm doing the OBS on my end here. So, woohoo! What a start to the video! I don't know. Anyway, welcome back to the show. I'll try my best to give you some value here over the next 10-20 minutes. It is 8 minutes past the top of the hour, so starting late. My apologies. It is the 19th of March, 2024, I guess. Geez, so we're already almost a third of the way through this. I guess, a quarter of the way through this year. So hope you're enjoying. And actually, I'm hearing all the climate people are all going on about how, wow, this was one of the warmest winters ever. Oh, my goodness. You know, and the polar bears up here in Canada are like, hey, man, we're sweating our balls off here. So anyway, should be interesting to see the summer. Probably going to be a pretty hot one. At the same time, too, I do find it interesting that, you know, the sort of, I don't know, corruption of our society with the capitalists, the way they take advantage of things. State of Texas here is basically killing $8.5 billion funding for this BlackRock, you know, fucking scam. You know, to this whole ESG movement. They're basically like, you know what, we've had enough of this nonsense. And I thought an interesting article here today, Hertz went in like full bore on these stupid Tesla vehicles, these electric cars. And of course, you know, the woke Canadian media, they're all over this. But fascinating how Hertz is getting absolutely decimated. They're going to take a massive loss on this because it turns out nobody really wants to drive the electric cars. So, go figure. I would imagine there was probably a premium to renting these over gasoline-powered cars, and everybody's like, screw that. Anyway, interesting times that we live in. Actually, probably the biggest headline that I saw today that's probably a sign that we're finally leaving this nonsense idiocy of this society that we had there over the past 20 years with all this money printing and, you know, zero interest rates and all that kind of nonsense. The Bank of Japan now has officially abandoned negative interest rates and yield curve control, and they're actually starting to see inflation come back to the Japanese economy here. So, in an interesting commentary, you know, I did make the comment the other day and put some tweets out to the effect that you think actually interest rates are high now. I actually think that interest rates could go higher. So, interesting how Japan, which has been basically the home of negative zero interest rate kind of idea. This was the tweet that I put out yesterday, and it is interesting to see energy prices are just flying higher here. So that in itself is like the ultimate sort of leading indicator for inflation. Energy is usually like it goes cost push and then demand pull. And this is a bond yield chart, and you can see, you know, hey, you've heard Brian talking about W's forever, so what a big surprise. Big W's are coming in, so Brian's thinking it looks like we want to head higher. And really the question ultimately is this nothing more than just a test of these previous highs? If you were a bot trader, then you can see where you'd be long this interest rates or short bonds. It would be the inverse. Notice 2.618 off of this W happens to line up nicely with that reload short zone, which happens to line up nicely with the move stop to scratch level on the trade, and then start locking in profits on a serious test of these highs. Because it's like okay, we're in a trade that's working, so at this point here you want to start actually thinking about moving stops up and locking in profits. But I actually think, conservatively speaking, I think we're probably heading up into this like 4.669 level. Notice there's 2.618 off of this original W, and that's also an 877 off of this cute little W right in there, all in that sort of area right in there. That's my hunch. So that's about 5.5% on the 10-year U.S. Government paper. And kind of like what we saw with Bitcoin recently. Of course, we'll talk lots about Bitcoin later on. Today is Panic Cook Tuesday, which means we have our crypto expert and TRI's CTO on the call in the after party. So we're going to spend lots of time talking crypto. You ready to rock these people's worlds, Fjord? I think
Yes, we are.
there he is. And of course, never a dull moment in crypto. Holy crap. But we'll talk about that in a moment, I suppose. But anyway, the point of the matter here is, you know, if Japan is now actually starting to say, we've got some inflation coming back into the pipeline over here, I don't think our inflation problems are going to go away anytime soon in North America and Europe. Sadly for poor old Sjord, I'm sure it's a lot of fun over there. We'll probably hear about that in his report. Um, but one thing I did see the other day was that China's coming back online. They're doing their crazy. They have these government mandated, which is total nonsense. You should never. I mean, God, I would have thought that we would have learned the lesson why you cannot have government mandated sort of growth targets and expectations, because it leads to absolutely screwy economics and just terrible policies. Whole cities being built and not a single person living in them. And then the whole damn thing has to get blown up and decimated. I mean, just horrendous dislocations. That's the whole reason why we have a free market. Um, yeah, anyway, hopefully, this coming fall, I think maybe we'll start actually getting our senses back together. It's interesting to see some of the, Central and South American countries are kind of like, what, this socialism stuff just doesn't work. Let's try and get back to sort of market-based economics. Anyway, hopefully we'll start seeing that pendulum shift here in North America relatively soon. But anyway, only time will tell. Regardless, with the rising energy prices, I think we all have to expect more and higher interest rates. And I've talked about how the bubble in the Canadian housing industry has to collapse. And the irony of it all is you go, why? What's the reason? And I could very easily see that interest rates are not peaked. They have not. I mean, this is how do you define a bull market? Higher highs and higher lows. I mean, and these tops, I mean, they don't really look like long term tops. That looks like a V top. At the very least, it has to be tested. So, I don't know whether you've noticed, but energy prices are going absolutely ballistic. Here's the oil ETF. I mean, is that thing in a bull market? And is this inflationary? Are we going to go up and test these ties up here? I think so. And if we think things like Foggenbaums, 2.618 would at the very least bring us up to fill in this gap up top here, which I think makes sense. It's pretty common sense. Question ultimately is, does this thing blast off and do we have to go up into things like 4669s way over here? And if that's the case, then oh boy, major inflation problems. So I don't think we're done the inflation issue. And of course, today is the first day of the 2-day FOMC meeting here for March. Ironically enough, based on the way that the US dollar is acting here, I think it in itself is suggesting that the market is thinking that the Americans are not going to be cutting interest rates. We'll have our FOMC broadcast that we do on a monthly basis through that window tomorrow. So that should be a fun conversation. It's interesting to see, though, that, we have obviously rallied smartly off of the lows here. You know, interesting how we did basically a 50% retracement of this entire move here. What do you think the odds are that this here was 50% retracement of that range? I'd say probably pretty good. So we're at a bit of a crossroads. And as I said there a moment ago, I've said repeatedly of late, um, if energy prices are as strong as they are, then I can't see the bond market getting happier, and I can't see how the Fed could possibly lower interest rates in the face of that's just impossible. Having said that, you can see the divergence starting to build here in momentum. You can see RSI itself is getting overbought. Willie's stupidly overbought. So coming in and buying the US dollar index here, probably not the smartest decision. Again, my philosophy, and this is what I've seen in my 30-year career, is that the politicians, well, let's say it this way. The banksters don't want to appear to be influencing the politicians as we go through the democratic process that, you know, the United States as the world hegemony, obviously, you know, they're the dominant player here with regard to the central banks, etc. The banksters don't want to appear as influencing that process, and so I've said repeatedly, and I'll say it again, I don't think that the Fed is going to be touching interest rates. So probably just leave them exactly where they are. There is relatively strong economic data coming around the world. You know, like we said, the Japanese now are saying, you know what, maybe it's time we start actually increasing interest rates after like 17 years of doing nothing and having negative rates. So, you know, the propensity for higher rates going forward, I think, dominates versus lower rates. Anyway, only time will tell. But it does look to me like coming to this trade here and buying US dollars or shorting the euro, shorting the Canadian dollar, all that kind of stuff, at this point, probably not a good idea. I wouldn't even be surprised if following the FOMC announcement tomorrow, I would not be surprised if you actually saw, you know, maybe something like that, and then this market works its way back down against these lows. So anyway, we'll see what happens. Only time will tell. Also, too, makes it very difficult to lower interest rates or even think about that when the silly stock market just keeps booming higher. And interestingly enough, today it's the blue chip Dow Industrials that's leading the charge. You know, pretty wide W's coming in here. Now, the interesting thing about this, and you know, if you are taking notes, you got scorecards. They always say that you don't really want to see the stock market rally into a Fed meeting. So that in itself is a little bit concerning. And if anything, I think that the stock market is trying to rally, especially the blue chips, right? The Dow Industrials, trying to rally into this on the anticipation that the Fed is actually done raising rates. It's sort of like buy the hopium, if you will, buy the rumor. And then unfortunately, when the Fed comes out and says, well, we're still data dependent, we're still watching the marks, and we're going to keep everything sort of, you know, level, and we are vigilantly watching closely, and we will react to the data. And then you probably see all this stuff roll back over. Having said that, I do find it interesting. This is an interesting market state in that one day you'll have the NASDAQ and the high beta stocks all booming higher, but you'll have the brick and mortar, you know, banks and brokers and industrial names and, you know, defense contractors and stuff all weak. And then next day, it'll be the exact opposite. So it does paint a very interesting environment that we're in right now. I'd also say, too, and it's interesting, we have Mr. Panicook here on the call. He did today, he did come out about a month or so ago, maybe a couple months ago, and say, I'm feeling pretty bullish of China. So it'll be interesting to see what his take is now on this. I get the impression that China's kind of run into resistance here now. You can start to see the divergence building, and I get the feeling that maybe the market was kind of anticipating that rebound in economic activity that you saw recently out of the Chinese data, and now maybe it's sort of like, okay, well, you know, the best is behind us. Heard Evergrande is in some more trouble. They need another big government bailout to stay afloat. I don't know. I'm not quite sure exactly how all that goes. And I've told you repeatedly, I would much rather you invest in a country like Japan than even look at fucking communist China. I mean, it's stupid to invest your money there. But nonetheless, I don't want to be insulting to other people. This is free market. That's just my opinion, and we'll see what happens. Only time will tell. So congratulations to anybody who did step in on that Chinese market about a month or two ago and bought, but just be careful. We're starting to see signs of divergence. We've got Willie stupidly overbought. We've rallied into resistance now, like trendline resistance, and you can see the volume on the rally is actually relatively tepid. So just be careful there with your hard-earned money. Suppose finish off this free broadcast. Thank you, Chris. Finish off this free broadcast with a reiteration of the warnings that the Beamish has been trying to convey to you about coming in on the buy side on Bitcoin here. So close to this fundamental event. And of course, this is the 2015-16 price action. And I think actually we had another anecdote today of this being the 15-16 cycle. I remember specifically in this window, BTCE all of a sudden one day panic dumped all the way into, I think it was about $150 a coin. And of course, everybody was freaking out. And I think that the scuttlebutt was that the guys who stole the coins from Gox, they were liquidating them on BTCE. Anyway, I was informed overnight that one of these flash crashes just happened again. And I do find this really interesting because I've been making the argument all along here that value on Bitcoin is the cost of production. I just simply say no ifs, ands, or buts about it. And frankly speaking, I'm not even quite sure why the public has bought into this narrative that just because they floated a whole bunch of exchange traded funds, that all of a sudden justifies these high valuations. And they're talking about net flows. You want to see what fucking exchange traded funds do? And, I am a shareholder, or at least I was a shareholder. I don't even know whether this asset is even alive anymore. But, here is an example of an exchange traded fund. And it's gone. So don't kid yourself. If anything, the fact that there's so many of these Bitcoin ETFs, that to me actually says that this market's saturated. All of these, these fund managers and stuff, they're not the smartest people. I mean, Cathie Woods, if you listen to Cathie Woods, you were buying her funds at like the very top of the market and you're down like 80-90% on your money. It's a complete disaster. So it still is, and this is years later. So, and that's even with Bitcoin rallying back because some of her other picks were just absolute train wrecks. So I'm concerned. I even put out a tweet the other day. I mean, you just saw a whole bunch of capital go into this silly environmental movement, and a global carbon offset strategy ETF, and it's gone. So, I mean, I certainly don't hope that this happens with the Bitcoin ETFs, but just because they float a Bitcoin ETF, that doesn't all of a sudden mysteriously give Bitcoin value up top here. If anything, like I just said, I mean, that to me is a sign of saturation. I mean, there's just way too much supply out in the marketplace right now. So I don't know how this is all going to play out. Nobody can predict the future, and I don't think it's in anybody's best interest to try and predict the future. But what I will just simply say is, there was a ton of writing on the walls that you really probably should have just, cooled your jets. Whether it be Bitcoin itself, and of course you've heard me barking about heading into halving events and what does a typical market likes to top out about a month or so ahead of the halving event. Litecoin Did an absolute textbook, top out about a month ahead of its having an event last summer. And it actually had to come all the way back down to reload zones. So the fact that Bitcoin actually traded all the way down to $8,000 overnight, and Stuart told me this morning, I was like, oh, here we go. So, you know, what am I supposed to say? Am I supposed to say, I told you so? I mean, obviously, that's not going to go over very well. But what I would just simply say, and just try and remember this, folks, green boxes are buying windows, red boxes are selling windows. And if you can't understand that basic concept, whether it be the Bitcoin price itself, in fact, I even had a very lengthy tutorial. I did an hour-long tutorial with a guy yesterday, and it went 2.5 hours because I was just so enamored with the sound of my own voice. I just kept going on and on and on. And I think by the end of it, the guy's like, okay, just shut up, please. I'm done. I'm done. Okay, I got my money's worth. I want to get the fuck out of here. But, I just, I'm trying to teach him how to trade. But, I was just like, you can't come in and buy something like this up here. You're just asking for trouble. Green boxes are your buying windows. So we'll see how this plays out. I mean, only time will tell. What I would just simply say, and if you do want to try and time your purchases, this RSI study that we've been working on for the past few years, which I think is really good value. It's just a really simple way of looking at the market. I put out an update to it this morning, and I did find it interesting that we've actually now made a third M now. Now, this is happening through the 50 line, so this is a little bit dangerous in here. I'm not quite sure how I interpret this, but I think what this is telling me here is that, and it makes sense with Bitcoin puking out and, oh, the sky's falling and all that crap, right? This is where the noobs are going to come in and they're going to start panic selling. And usually they sell into the bottoms. And it's kind of tragic. It's the way capitalist machine goes. What I would just simply say, though, is if you want to keep yourself out of trouble, just wait for this thing to somehow put in some sort of W. Notice here, this is painful. Oh, another M. Oh, another M. Finally, a W comes in. And that W, just very much like this M up top here, this W here, if and when it does come in, it will just simply say, look at the bear story is done for now. Let's just let everything settle down. And maybe on a new M, we can start thinking about shorting again. But I don't think it's a good idea to come in and short the third M or the third breakdown here. And in my work with RSI, I found that this third breakdown usually is a trap. So, take it for whatever it's worth. What I would just simply say is, at the very least, what I need to see is some sort of W that comes in on this thing that sort of says, all right, the selling is done for now. And at the very least, right, we can just sort of, cool our jets, lick our wounds and sort of reassess and decide where we go from there. So as it stands right now, the Bears got the ball, but at the same time, too, we're very late in this down move here now. And I don't think it's a good idea to get sucked into the bearish euphoria here. So go figure. As for the broader crypto market, we'll just sort of finish off this presentation. Actually, I'm not feeling too bad about the broader crypto market. I mean, I definitely think, we got way too far ahead of ourselves on the bull side. A lot of these names were just going absolutely parabolic. And, it's probably about time we started at least cleaning all this up. If I look at the total index, this is probably a good proxy on the space. I don't think I'm quite at the point of saying this is a short, although I will say that is a pretty darn good looking little empire pattern that's forming here. Still don't know whether we have the indicators actually breaking down yet, showing that internally we're toast. MACD is still very uppy. we are ridiculously overbought. So coming in and actually buying this market, I don't think is a good idea. If anything, you probably just want to let this stuff settle down. This is a weekly chart, and I've said this, we could do this on Bitcoin. It's the same logic. As long as the moving averages are still relatively positive, on Bitcoin, the fast moving average for me right now is sitting right there at about 54,000. So that means we could still lose 10 G's here, no problem. And I think it's the same thing on the total, right? So if we come over here and look at our moving averages, you can see there is the fast moving average on this weekly, but at the same time too, moving averages are still pointing bullishly. They're pretty wide, and if anything, what I wouldn't mind seeing is them maybe come back together again and give us a little bit of sort of consolidation. That would be healthy. And also too, sell in May and walk away. We've got the halving event coming up. The Fedsters are all humming and hawing about interest rates right now. The Japanese just raised their interest rates, which of course is something that hasn't happened in like 15 years. So, is this a good place to be a buyer? You know what my answer is going to be. If you did buy off the bottom and you are sitting on some nice profits, is it a good idea to pay yourself? Message hasn't changed here at all. What I do find fascinating is look how absolutely textbook that bullish bot ABCD doink bot target hit. You better have rung the register because if you missed the trade, boom, back down we go. So really good testament to why I actually like to work AOCO orders, which stands for auto order cancels order. But in essence, on that bot target tag, ding, 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 you get filled on the sell side as everybody in the public is all orgy bullish. We're going to the moon, and Brian's there on the exact opposite side of the market. And it happens so often. So anyway, there's your market recap, your summary. I don't think there's nothing new about this. Now, do you all understand? There's nothing different about any of this that's going on right now. And you all need to learn. You must learn this. That as soon as you start hearing the public say, oh, but this time it's different, then you know that we're like within earshot of some sort of pivot. And sure enough, it happened again. All right, everybody, I think I'll leave it at that. As I said, probably the number one way for you to measure, I hope I don't lose my screen here. The number one way for you to measure whether the selling is actually done, I think, is to keep an eye on this RSI. As soon as this RSI W's out, and this could be pretty damn violent, don't get me wrong, but I think you got to wait for this thing to W out before you can actually say, all right, I think the dust is settled and we can actually start getting back sort of enthusiastically optimistic again. Right now, you better just be in defensive mode. All right, have yourselves a great day. As I said, we've got Mr. Panicook. Mr. Panicook, you ready to rock these people's worlds? Uh-oh. Did we lose him?
Yes, there's the unmute button.
There he is. He's one of the best fundamental analysts I've seen in this crypto space. It's been an absolute honor and a privilege to work with him over the past 5-10 years. He is running a fundamental analysis portfolio in crypto and at TRI right now. The portfolio has moved up substantially. And, when I had a meeting with him here this morning, I just said, dude, just cool your jets. You fucking won. Don't stress about this stuff. Yes, the market has to correct it. Rubber band cannot be stretched for too long. It has to correct itself. But that doesn't mean we're in a bear market. It just means that the idiots are bid this thing up way too much. And now we got to take some time and just cool things down. And sadly, of course, the fools that came in and bought up top here and didn't know what the hell they were doing in the market, they are going to be in the process of being punished right now. But smart fundamental investors, come on the after party and we'll talk with Sjord where he actually is long some of these incredible names, and it'll shock you to see where the prices of these things are relative to where he bought. So if anything, a guy like Sjord should be taking a victory lap right now and just cooling his jets. So come on over to the after party. Let's hear what he has to say, and whether he has any new names that are on the radar screen that he's going to be thinking about adding to the portfolio after all the noobs and stuff get washed out of the market, and we can get back to the business of making money from trading. All right, have yourselves a great day. Hugs and kisses, all the best, and bye for now.